Hello there, my name is Kim, and these are the Wayrider Chronicles, my alternative look at current affairs. Hi there everybody, we're going to talk about not so much the fact that BTC, which is the code symbol for Bitcoin, reaching $100,000 per coin. You need to put that in this perspective. That's one Bitcoin is worth $100,000. This has been on the cards for weeks, ever since Trump was re-elected. It's been included in something what the financial markets are calling the Trump trade. This latest rally this latest move up to the $100,000 level by Bitcoin was precipitated by the proposal by Donald Trump for the next chairman of the SEC, a guy called Paul Atkins, who's seen as very bullish for anything to do with cryptocurrencies. This is a different subject, but just briefly, up until now, the Biden administration has been seen to be crypto negative, whereas the Trump administration, something new, but anyway, is seen or is perceived to be seen as something crypto positive. That's not what I'm talking about. What I'm talking about is what I would like to talk about is something called volatility. So if we go back 2 days before this famous move to over $100,000 per one Bitcoin, something happened in South Korea. And what happened in South Korea was that the leader of the South Korean government decided to impose martial law. The fact that it was drawn within 24 hours is neither here nor there. But there's something else which was much, much more critical for the price of Bitcoin, and that was volatility. So what does volatility mean? Volatility is essentially a term that's used in financial markets, which means how much the price of any one coin, share, anything that's quoted moves at any one time. So the lower the volatility means that it's progressing a little bit. High volatility means that it's all over the place. High volatility means that you can either have big gains or big losses. Some, obviously traders, love that type of situation because they can make big gains, but they can also make big losses. For your individual investor building up his retirement egg, volatility is not something you really like to have. However, definition of volatility, what happened in South Korea is that essentially the volatility or it wasn't so much volatile, it became so volatile that the price of Bitcoin, because Bitcoin is quoted all over the place, it's essentially an unregulated market. There are like Coinbase in the United States, which is sort of regulated by the Americans, but they don't trade a lot of coins. Most Bitcoin exchanges exist virtually in different jurisdictions without hardly any government oversight. What happened in South Korea, and South Koreans are extreme crypto gamblers, the price went essentially illiquid. Okay, here's another financial market term. Illiquid means nobody wanted to buy and sell it. So what happens when a market goes illiquid, there are no buyers and sellers, there's two things that can happen. If there's too many buyers, it'll just go up until you find a seller. If there's too many sellers, it will go down until eventually you'll find somebody who buys it. What happened was that in South Korea, on that particular day, when the leader of South Korea, which was 2 days ago, proclaimed martial law, the price of Bitcoin quoted on South Korean exchanges was $30,000 different to what the price was on other world exchanges. Okay, so just think about that for a moment. we have a price of an asset that there is a $30,000 price difference, which is ridiculous, absurd. Means that it does not make any sense. It's like it's very difficult to do a comparison to it. Normally, in most markets, that will not happen. You get something called an arbitrage. An arbitrage taker will take, or an arbitrage trader will take advantage of that. Will immediately start buying that asset and selling the asset to, and the arbitrage, the price difference disappears. This didn't happen, not immediately anyway. It's not, the issue here is that we have a situation which is plainly ridiculous. You cannot have a major financial asset that on a piece of news, which is a fairly big piece of news, geopolitical piece of news, which goes essentially liquid and quotes at a 20-30% discount to what the market is doing. That's absurd. Take for example the price of gold, which is around about $2,600 per ounce at the moment. If suddenly it was worth $1,500 within a couple of hours period, everybody would go, they would freak out. The whole world would go, this is absurd. So the point I'm making here is that there is something fundamentally wrong with an asset market that is quoted in one country and is supposedly to be a world asset, seeing as BlackRock and everybody else has got into producing or quoting ETFs, exchange traded funds, in Bitcoin. There is something fundamentally wrong with a market that will dislocate to that extent. It does not forebode well for the future, because that was Bitcoin, as far as I can see, is very or extremely sensitive to global or geopolitical issues. We're in the middle of a very fragile global political period. Don't really need to cite them. Ukraine, Middle East, Gaza, South Korea, yes, South North Korea, etc., etc., etc. What happens if we get a major global geopolitical event? What would happen then to the price of Bitcoin? The issue is that the price of Bitcoin, the asset class that Bitcoin has become, is in huge number of different portfolios that did not own this asset before. They're all sitting there going, whoa, we're all very happy, it's gone over 100K. However, with that type of situation, if I was a UK or American pension fund sitting on a large amount of Bitcoin, I'd be looking very closely at that asset class within my portfolio. See you guys.